In this video, I'm going to show you how you can invest every month into a global fund on Trading 212. So first things first is to have the Trading 212 app in hand. And if you are new to Trading 212, you can also receive a free fractional share worth up to £100 just by clicking the link in the description box down below. Or you can go into the promo code section of the app and just enter the code Jubair. Now on Trading 212, there are two main accounts that are suitable for long-term investing. The first one is the Trading 212 Invest account and the other is the Trading 212 Stocks ISA. Now if you are a UK investor, you will see this second option, the Stocks ISA, which means that anything that grows within this account will remain tax-free, hopefully for the rest of your life. So unless you have a cash ISA or a lifetime ISA somewhere else, it pretty much is a no-brainer just to go for the Stocks and Shares ISA, which is called the Trading 212 Stocks ISA. Now after all those processes are done and you've opened up your Trading 212 Stocks ISA or your Invest account, it works both ways. All you have to do is to go into the magnifying glass menu down here. Now it is here that you will find the index funds that you want to invest into. For the purposes of this video, we are investing in global funds. So in the search menu, if you are not very familiar with which index fund you want to go for, then what you can type in is world. Now if you type in world, it will populate a list of, common world index funds that you can choose to invest into that will give you a lot of exposure to the world's, stock market. Now, I wouldn't really recommend doing this. Instead, do your own research as to what index fund you want to invest into, because all I can do is just assume that you want one of those in this list. I've made a separate video on trying to choose the best world fund for you, so you can check that out over here. But anyway, if you do want to just go into any world fund, you can type in world and you'll get a list of different world index funds. For example, the first one we see here is by Vanguard, which is the FTSE All World. Now this is the Vanguard FTSE All World, a very popular index fund which tracks basically the world's stock market. Now one thing you'll notice quite quickly is that even a All World fund will be very heavily concentrated towards the United States of America, and I will explain that a bit later. It doesn't mean you're going to be invested into every single country in the world. It will just mean the most popular stock markets in the world, you'll get exposure to them. Now like I said, this is the Vanguard FTSE All World, and as you can see in the brackets, it does say ACC. Now, ACC is an abbreviation for accumulating, which means that the fund reinvests any dividends that are paid out by the companies that it tracks automatically back into the fund. Now you do have to realize that if you are investing outside of a stocks and shares ISA and you're investing into this fund, you might still have to pay dividends tax. So in that case, it might be, useful to actually start investing within a stocks ISA or consulting an accountant. So on Trading 212, there is a graph that allows you to see the performance of this fund over a set period of time. You can see 1 day, 1 week, 1 month, 3 months, and so on and so forth. Now there are a few things to note if you do want to select your own all world fund or even continue with this one. Now, as you can see here, it says expense ratio, and sometimes this is known as the TER or total expense ratio, and this is the amount that the fund costs per year as a percentage of the value of the fund. Now, this fee is not taken out of your balance or anything like that. It's just taken out automatically from the value of the fund, and this is managed by Vanguard in this case. If you choose a different fund provider, then they will manage this, and they can often charge a higher or lower amount depending on who they are. Now, as you can see, the top 10 holdings are pretty much all going to be American companies here. So you have 6.92% in Apple, 4% in Nvidia, 4% in Microsoft, and so on and so forth. Now, this is very, very similar to the S&P 500 because if we check out countries here, you will see that we have an over 64% exposure to the United States of America. So what actually makes this a world fund? So you can see we have 5.74% roughly exposure to the Japanese markets, 3.42% to the United Kingdom markets, 3% in China, 2.3% in Canada, 2.2% in France, 2% in India, and the list goes on. Now, if you want, to spread out your geographies, you might want to look into a fund that invests probably heavier into the bigger economies around the world, for example, China, and a very significant emerging market, which has one of the largest populations, if not the largest population in the whole world, which is India. Now, obviously, Vanguard gets to choose how they want to, invest your your funds all around the world. But I do have to say this, just because, 65% is in the USA does not mean that Vanguard is purposely trying to keep you away from things like China and India. When it comes to investing in the UK or the US, the relationship between China and the USA could play a huge part in the role as to why Vanguard does not invest heavier in China, because if relationships turn sour, then that could mean a loss in the performance of the fund. Now, in a similar vein, India may not be highly represented because the stock market is not as mature as, other markets, for example, the UK market, the Canadian markets, and so on and so forth. Now, if you do want to invest more heavily into India or China, you're going to have to take the additional risk, and I believe that Vanguard in this occasion doesn't necessarily want to do that. Now, like I said before, you can get the ACC version, but sometimes you can actually get the distributing version, which means that the dividends are actually paid out to you, the shareholder, into your available funds, for example, your uninvested cash, instead of being reaccumulated back into the fund. There are pros and cons to both of those. I actually prefer distributing because then I can manage the dividends by myself. For example, here we see the fund Invesco FTSE All-World. Let's go into that. And again, this is an accumulating fund, which means the dividends are reinvested back into the fund, and that just means the value of the fund will increase. You won't actually see these dividends. Now, in this video, I'm not going to tell you what to invest into, but you can see there are a lot of options when it comes to all-world funds. Now, here is an example of another all-world fund, but this is from iShares. As you can see, this is called the iShares MSCI World Fund, and this is a distributing fund, which means that the dividends are paid out to the shareholders as cash. You can also see in the top left corner, it does say IWRD, and this is the ticker code. Now, if you do know the ticker code for the fund, each fund will have its unique ticker code. You can put this into the search menu and just go into the fund like that. But as you can see, there are a few things to note. If you are a UK investor, then you do want to invest in either pence like this or pounds. Otherwise, you're going to be paying an extra foreign exchange fee. So here, the expense ratio, as you can see, is 0.5%, which is actually quite a lot higher than the Vanguard version. So you might want to consider this in your decision-making process. Now, if we go into countries, you can see this fund is even higher weighted towards the United States of America at 71%. And this is very typical for all world funds. You can see Japan at 5.65%, United Kingdom at 3.6%, Canada at around 3%, France at around 3% too, Germany around 2.5%, and the list goes on. Now, in my opinion, this is not a true all world fund because it doesn't actually hold any, noticeable weighting in Asia, which in my opinion, if you're going to be investing in all world and you're missing out Asia, which is the most populous continent on earth, then is it really an all world fund? I mean, I know Japan is at 5%, but we're missing China and India, which could be part of other, but I would like to see this as a bigger holding. But anyway, let's just go for this fund here in this example. So for this example, I'm going to go for Invesco, the FTSE All-World, the FWRG, as you can see here. So once you're ready to buy, all you have to do is to press the blue button here. Then you can start buying for as little as £1, and then you can press review order and just buy that fund. So once you have bought the shares, what you're going to want to do in order to be able to buy per month is to set up a new pie on Trading 212. So as I just showed you, you can actually go into the search menu, find your all-world ETF, and then just buy it like that, and then move it into a pie. Alternatively, you can also do this. So over here, I want to go to the menu plus new pie and press into that. There are three options. I want to go to custom. Now over here, you can build your own pie and add your selected ETF and then just create a pie and invest monthly. So we're going to press the blue button down here called add instrument. Now over here from the previous step, we want to add our all-world ETF. So like we've said, we've gone for the FWRG. So we have to search for that by using the ticker code FWRG, and then you will see the first one here is the FWRG, and we want to make sure it is on the London Stock Exchange. So we're paying in pence or pounds. At the bottom, you can see London Stock Exchange and not the one on the Nasdaq, which will be in dollars. So once we've gone into this menu, we can see it's the Invesco FTSE All-World FWRG, and we can just press add to pie here and then just press the button here, which is the next blue button. And as you can see, we're just going to have this one holding because if it's an all-world fund, we really only need just one fund. If you want to add another one or the S&P 500, or you want to add, something like the FTSE 100, you can add it to this, but we're just going to leave it at a 100 100% weighting, and then press next. Now, the reason why we put it into a pie on Trading 212 is because it will give us the option to invest with auto invest, so you can set up an investment schedule and automate your deposits. So this is what we want to go into and press next. Now here we can see an investing plan which gives you a very rough projection. Remember, past performance cannot really indicate future growth, so you can't rely on that. But for example, if you initially deposit with £1,000 and then you put in £1,000 per month for 5 years, you can be projected for around £61,000, and over 40 years that could be over £619,000. But again, take this with a grain of salt. So for example, let's do a minimum deposit of just £1, and every month you can choose exactly how you want to do it. So you can do it daily, weekly, bi-weekly, monthly, or every 2 months. Let's do monthly, and on the 28th of every month, remember February has 28 days, that's why you can't do 30 days, because on that February it won't work. So let's do 28th of every month. Well, actually, let's just change it to the 1st of every month. We want to put in, let's say £100 a month, which is very sensible. We don't need to actually mess around with the years. Let's do 40 and then press next. And then you can name the pie. You can name the pie, for example, monthly all world, and then just press next. And there we have it. We have created a pie called the monthly all world. We start off with a deposit of £1. We invest £100 on the 1st of every month for 40 years. Of course, you can change this later. And then all we have to do is to fund the pie here. If you haven't already set up your bank transfer, you can actually pay by card. However, I would not recommend this, because after your first £2,000 in deposits, you will have to pay a massive 0.7% fee. Now, if you already have free funds in your Trading 212 account, you can actually just use your free funds. So you can just press this here, and this is how it works. So the initial deposit is £1, and any future deposits will be £100 taken from your free funds. Trading 212 recommends that you set up a standing order from your bank, so that your bank sends, £100 in this instant into your Trading 212 free funds every month, preferably at the end of the month, so that it is ready for the 1st of the month, or however which way you set up auto invest. Make sure that the bank sends that money into your account, at least a day before, so that everything is free for your automatic investments. And then just confirm this and you are set up. So as you can see under my investments, we have this fund here, which is the monthly all world. You can see that you can also set a goal. For example, if you want to get to your first 1,000, just press 1,000, and it will keep track of that and tell you what percentage you are towards achieving that goal. So as you can see right now, auto invest isn't activated because I didn't fund the pie, but it really is that simple. Once auto invest is enabled, you can also enable dividend reinvestment, which means if you chose a fund that has a distributing scheme, then those funds can automatically be reinvested when they are cash put into the pie, and those funds will be reinvested back into your ETF. You can always choose an ACC fund and that will be done itself, or you can choose distributing and you can see those dividends. And for me personally, I would rather see those dividends, so I would always choose ACC. It really is that simple to invest monthly into a world fund on Trading 212. So make sure to check out some of my other videos, and I'll see you in the next video.